Yesterday, the euro edged up in the European session. The focus of traders was on US consumer prices. Annual inflation accelerated to 3.2% in July 2023 from 3% a month ago, but below forecasts of 3.3%. On a monthly basis, U.S. consumer prices ticked up 0.2% in July, matching analyst forecasts. Annual core inflation stood at 4.7% in July, down from June's 4.8%. Statistics proved to be better than expected, which allowed Europe's single currency to gain stronger upside momentum. Then, however, traders locked in profits, thus bringing the euro back down. After all, data shows that price pressures stay high. That is, the situation regarding further interest rate increases remains uncertain. The Fed is expected to keep a close eye on GDP and inflation data for August before making its next interest rate decision. Although the euro dipped in late trade, its uptrend as part of a bullish correction remained intact. Now the principal task of bulls is to break above 1.1060 and push the price further up. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. Britain has already released data on economic growth. The UK gross domestic product grew by 0.2% in the second quarter of 2023, while the annual GDP rose by 0.4%. This means that the economy remains resilient despite its overheated labor market and higher interest rates, which the central bank is expected to raise further amid surging inflation. Against this background, the British pound has every chance of resuming a bullish run. In addition, UK industrial production jumped by 1.8% in June. Today, traders are also awaiting data on US producer prices. The producer price index is expected to increase by 0.2% in July. However, this report is unlikely to have a severe impact on market dynamics. Nevertheless, a continued rise in prices will ultimately lead to a decline in risky assets against the dollar. Besides, market participants may take notice of the University of Michigan's preliminary readings on consumer sentiment and inflation expectations. Downbeat data may put further pressure on the euro and the British pound. From a technical point of view, it is worth focusing on the resistance level of 1.1013. A rise followed by a false breakout at this mark will create a sell signal, thus dragging the euro down to 1.0969. If the price breaks below this level and tests it from the bottom up, the euro will sink to 1.0931 and then get stuck in a sideways range. Alternatively, if the price rises above 1.1013 or forms a false breakout at 1.0969, it will be possible to go long with a view to hitting a new one-week high. However, it's not an easy task, so I recommend going short on a rebound, counting on an intraday correction of 25-30 pips. Meanwhile, the British pound has responded to GDP data with gains. A false breakout at 1.2705 will create a strong sell signal. In this case, sterling is expected to break below 1.2666 and extend weakness, heading for 1.2623 and 1.2592. At the level of 1.2592, traders are recommended to go long on a rebound to catch an intraday correction of 25-30 pips. Long positions at 1.2623 and 1.2666 can be considered only amid a false breakout. As an alternative, if the price consolidates above 1.2705 and tests it from the top down, It would be a wise decision to open long positions, counting on a recovery to 1.2739 and probably 1.2774. At the mark of 1.2774, traders may go short on a rebound in the hope of a correction of 25-30 pips. Going short at 1.2739 and 1.2705 will be relevant only in the event of a false breakout. Good luck!